All right, let's talk about NorthWestern Energy's latest earnings call. And honestly, this one was fascinating because on the surface, you had a kind of mixed quarter, but if you dig just a little deeper, you find a company that's making a huge strategic pivot, one that could totally rewrite its future growth story. So, first things first, before we even get into the weeds of the numbers, just look at this chart. It tells you a whole lot about what's really going on. In the months after their announcement, NWE's stock just smoked the rest of the utility sector. That tells us that the market heard something it really, really liked, and it went way beyond the headline numbers. So here's the game plan for today. We're going to hit the top line scorecard first. Then we'll dig into what's really driving the numbers. After that, we'll unpack their really ambitious new growth plan, listen in on the tough questions analysts were asking, and finally, we'll give you our verdict on what this all means for the next call. Okay, let's get right to it with the scorecard. How did Northwestern actually stack up against what Wall Street was expecting, and maybe more importantly, against their own performance last year? And this is where you see the two different stories. On one hand, you've got a solid beat on both earnings and revenue. That's good stuff, and it explains why the stock got a nice little pop on the day. But, and this is a big but, look at the earnings compared to last year. A pretty significant drop. So what gives? That's the real puzzle of this quarter. But here's the thing. Despite that drop, management came out swinging. They didn't flinch. They put out strong guidance for the rest of the year. They doubled down on their long-term growth targets, and they kept the dividend rock solid. They're basically sending a smoke signal to the market saying, hey, that dip, temporary noise. The real story is still right on track. So that brings us back to that big question, right? How in the world do your revenues go up, but your profits go down? Well, the answer is in the details, and it's this incredible tug of war between the core business doing well and some pretty serious headwinds pushing back. And here's the simple version. The main business is actually humming along. They're getting the benefits from new rates they were approved for. But they got hit with this cocktail of bad news, funky weather, higher costs, and a brand new property tax law that all came together to put a real squeeze on the bottom line. And this chart just lays it out perfectly. On the left, you've got all the good stuff. I mean, look at that. A huge 24-cent boost just from getting better rates. But then on the right, you see the drags just eating away at it. Bad weather, new taxes. It wiped out about half of their gains. It's a classic case of 2 steps forward, 1 giant step back. Okay, so now we get to the real reason the market got excited. This is the heart of the bull case. And believe me, it has very little to do with the quarter they just reported. It's all about what they're building for the next 5 years. Management laid out this super clear 3-part game plan. Step 1, go capture a piece of the insane demand for electricity coming from the data center boom. Step 2, make sure you actually have the juice to power all those new data centers. And step 3, and this is crucial, get the state laws changed to make the whole business safer and more predictable. And they're not just talking a big game on the demand front. They are going all in on the AI power gold rush. They just signed their 3rd major letter of intent, this one for a project that's over 500 megawatts. That's huge. And here's the kicker. They put a clock on it. They told investors to expect at least one of these to become a real binding contract by their next call in October. So where's all that power going to come from? Well, that's where the Colstrip power plant comes in. They're buying up a bigger piece of it so that by 2026, they'll actually have more power than they need. And maybe even more important, they're playing defense. They got 2 massive legislative wins that lower their risk from things like wildfires and make it easier to build big new projects. That's a game changer. Now this is where things get really fun, the analyst Q&A session, because you can tell what Wall Street is really thinking by the questions they ask. And let me tell you, nobody was asking about last quarter. They were all focused on one thing, executing this new growth plan. So JP Morgan steps up to the mic and they ask the million-dollar question that was on everyone's mind. Okay, this data center stuff sounds great, but is it real? When are we going to see a signed contract? And the CEO, Brian Bird, he didn't blink. He didn't hesitate. He basically drew a line in the sand and put his own credibility on the line, promising a deal by October. That one sentence turned the next earnings call into a must-watch event for the stock. Then Bank of America comes in with the perfect follow-up question. It's kind of like, all right, let's say this all works out even better than you think. What's the plan for the next phase of growth when you run out of power? And his answer was, honestly, pretty genius. He revealed another layer of their strategy. They're using what's called a build-own-transfer model.
So the data center developers take on the risk of building new power plants, and then NorthWestern has a path to just swoop in and buy them. It's a brilliant, low-risk way to keep the growth engine running for years. Okay, so let's put this all together. We've gone through the quarter, we've looked at the strategy, we've listened to the Q&A. What's the final verdict? What should we really be watching for now?
Well, the next 6 months are going to be a whirlwind. I mean, just look at this roadmap. It's one massive catalyst after another. You've got the data center signing, a huge regulatory decision, the Colstrip deal closing, not to mention the big merger with Black Hills that's in the works. This is definitely not your sleepy old utility stock anymore. So our prediction for the next call is pretty simple. Nobody is going to care about the earnings per share number. It's all about one question. Did they sign that first data center deal? If they deliver on that promise, the growth story's real, and we expect the stock's momentum to keep rolling, especially as the Black Hills merger becomes a bigger part of the conversation.
For us, when you add it all up, the thesis is really clear. You have a credible, powerful pivot to growth, you have major legislative wins that are de-risking the entire business, and you have a tangible, massive new source of demand from the data center boom. That's why we're calling this one an outperform. And of course, the final reminder, this is our analysis of the quarter and the company's strategy, but it is definitely not financial advice. All of this information is for educational purposes only.